Okay, look at that. That may just work. Let's see if I can take a screenshot of this. And I can. And then let's see if I can draw on this as well. Wow. Works great. Okay. Thanks for being here, my friends. You can let me know if the audio is working properly. Mark says good afternoon, so it seems like it might be working perfectly. Thanks for being here, my friends. I'm just Googling a couple of things right now, just to make sure I know how to take a more efficient screenshot during the presentation. Here we go. So you can probably see my charts right now, and we'll do a countdown. All right. All right. Windows, print screen, FN Windows spacebar. FN Windows spacebar. Okay, that didn't work. Let's see here. Happy Sunday to you. We're going to get started here. Windows Shift S. That's the one I want. Windows Shift S. And where did that image go? That's the question. Where did that image go? All right. All right. Oh, it goes to the clipboard. Okay. And then I just got to find a place to drop that image if I want to use it. Okay, that's cool. All right. So welcome. I'm happy that you're here, my friends. Thanks for joining me. And we'll get started in just a moment. Appreciate you being here together with me on a Sunday. Sunday, June 11th. We're about 2 minutes away from beginning. And look at that. That did work perfectly fine. All right, I can share my entire screen with you now. Let's see here if this works. All right. Then I grab this. Oh. Perfect. All right, I'm just testing out some stuff on the old computer box. Thanks for being here, friends. This is the Tim Sykes Challenge information session. My name is Rob Booker, and we'll get started here in just a moment. Dennis says hello from Utah. Anderson says it looks good. Larry says sound okay. Oh, wow. John's in Santorini, Greece for a month. That's amazing and wonderful. All right. It's good to be here with you, everybody. And happy Sunday. It's Sunday, June 11th. It is now 12 p.m. Central Time, and we're going to get started very, very soon. I'm excited that you're here with me. I have a couple of links that I want to drop inside of the chat right away, just to make sure that they're there when we need them. So if you give me just a moment here, I'll be able to drop those links in there. This link should work. If you want to, you can test the link to make sure that it works all right. I'm sure it will, actually, because I didn't put a HTTPS thing on it. Okay, that link works. Perfect. And this one does not, so I have to just add in a couple of things. There we go. That'll work. All right, that's great. Mark says, will there be a recording of this webinar? There sometimes is, sometimes isn't. So you really actually, you never know if the recording goes through. We certainly try for you, and hopefully that will be the case. But you can't make any promises that that's the case. All right, so welcome, friends. My name is Rob Booker. I will be your host, and we're going to get started here. And we'll kind of get a slow start going just to make sure that we give everybody a chance to get here on time. And while we're waiting for everyone to get here, I'm going to share my charts with you. I'm going to go to a lighter background chart just to make it a little bit easier for you to see. The big mover on Friday was AHI. I took a lot of people by surprise. And we're going to take a look at AHI. And the reason that we're going to do that is I want to build some trust with you. And I want to hopefully have the chance to work together with you in the future as one of your trainers and instructors inside the Tim Sykes Challenge. For those of you who have been here before, you're absolutely spectacularly and awesomely welcome here, and I'm glad that you're here. And for those of you that have never been in one of these sessions before, I want to just say thanks for being here. I appreciate your time. And we're going to walk through, just for a minute here, we're going to walk through a complete overview of the big mover on Friday. If you don't know where, when, how to find the stocks that are moving, we're going to cover that. And if you've ever wondered how exactly it is that you can take advantage of a move in the stock market, if you feel sometimes that you miss those moves, we're going to talk about that also. And so this is not pre-recorded, William Schultz. Unless I'm a psychic, I wouldn't know that you were here. You can see the date and time in the lower part of my screen. From time to time on this webinar, it will appear. It is Sunday, June 11th. It is 12:02 p.m. Central Time. And I will be your host. My name is Rob Booker. This is not pre-recorded. This is 100% live. And it's nice to see you here, William, from Indiana. And here we go. So on Friday, AHI was the big mover. Now, I use a scanning tool to show me the stocks that are moving the most. And I find those stocks, and then I take advantage of the fact that they're the biggest movers with the most volume by trading them on breakouts. And we do this together inside of the Tim Sykes Challenge. And so this is AHI from Friday. I'm going to remove some things off of my screen here just to give you a better view of what it looks like. So I'm going to zoom in here on the pre-market session. So I'm going to get rid of this chart over to the side and then get a good full view of what we're looking at. So this was AHI on Friday. And it jumped up in the pre-market session and stopped right at 85 cents. And then it dropped back lower. And then it jumped up again and couldn't even quite get there, dropped again. And then when the market opened, it jumped up and rose above that pre-market high. I'm going to draw a circle around that so you can see exactly where I am, what I'm talking about. So that is the breakout from above the pre-market high, and that's a buy trade. And that was a really, 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 really great idea. That was a really great idea. Let me show you a couple of reasons that I believe that was a really great idea. We found the stock together. We set up the trade together. I recorded every single minute of the trade that we took together. And when I say trade together, it doesn't mean that I'm telling you to take a trade or that even that I'm running an alert service. All I'm really doing is setting up trades right on my charts while you're watching. And then if you choose to, and if you feel like it's the right decision, you can trade those also. So when AHI broke out, you can see here at the bottom of the screen, there was a very, very significant amount of volume. And in fact, at that point in time, it was the highest amount of volume for the day was a green candle. So not only did we break out above the pre-market high, but we also showed the most amount of volume that we'd seen all day long, all morning long, from the pre-market session into the opening of the market. That's a buy trade for us. And then what we did was we started picking profit targets. And I'm going to briefly show you the profit targets that we chose. The first profit target was at 89 cents. The next one was at 97. The next one at $1.06. The next one at $1.15. The next one at $1.28. And you can see here it printed a red candle after hitting the $1.28 level. And that was kind of the exit. That was the first exit. That was the first known area to get out of the trade. Well, that's not the only place that it went that day. And you've been there, I've been there, where we missed the first move or the second move. and we don't exactly know how it is that we can set up a trade on something that's already been moving. And we've all done it before where we've seen a stock moving and we kind of chased it. And then the minute that we bought it, it was the high of the day and it moved against us. And we want to avoid that kind of a situation. And so in order to avoid that kind of a situation, we need to do a better job of finding places to get in. And your entry is going to make all the difference in the world in a situation like this. As soon as AHI produced this red candle right here, that designated it as, okay, it made a high, it stopped. And what we can do at that time is we can draw a horizontal line across that level. And once we draw a horizontal line across that level, we can trade a breakout beyond that level. So immediately, when price crossed this breakout level, immediately, we could take a buy trade at $1.29, $1.30. And that's exactly what traders inside of our group did in many cases. And then it continued to rise upward. Now, what I do in situations like that is I will redraw my profit target lines, and we will look for it to reach up to and at those targets again. Now, every single time it prints a red candle, we can get out with the money that we've made. We can redraw the high of the day, and we can trade the breakout beyond the high of the day. And we can keep doing this over and over and over and over again. And we could do that all the way up into the afternoon session, because eventually stock will grow tired of rising higher. It's simply just like anything else. Running uphill will exhaust you faster than running downhill. And a stock will lose some steam and it will get tired as it runs uphill. And usually that's going to happen around 11 to 12 p.m. 11 a.m. to 12 p.m. Eastern time. And then you can draw another level across those highs, and you can trade another breakout. And so like I said, if you've ever been in the situation where you saw a stock moving and you decided you were going to kind of chase after it, what will happen a lot of times is people don't know the times of day and don't know the levels to watch. And they will buy it right here. They'll get stopped out. They'll buy it again. They'll get stopped out. They'll get frustrated and they'll walk away from the charts. And the next thing you know, it will break out and it will continue to move. And that's exactly what AHI did. And it jumped up all the way to the final profit target level that it could get to. And then it sort of drifted lower for the rest of the day in the after hours session. So that's AHI. That's the system that we use. That's the strategy that we trade. And for those of you that have been in a webinar like this before, you know exactly what we do, and we've talked about it before. All right, so Sarah says, is the blue VWAP indicator? So the volume weighted average price is in blue and the 200 simple moving average is in purple. Okay. Dennis says, I like what I see here. Great. Well, I'm super happy to have you here. So welcome. We've got everybody here. It's time to get started. It's about 8 minutes after the hour. And that's kind of an overview of the biggest mover of the day. Now, for those of you that are kind of brand new to what we're doing here, my name is Rob Booker. Here I am. I am the host of the Tim Sykes Millionaire Challenge podcast. So the Tim Sykes Millionaire Challenge is a complete course and live trading program that helps you to have more success in your trading. And what we're here to do today is give you an overview of the course and what we do when we trade together in the mornings. And then if you'd like to, you can use the links that I've posted off to the side in the webinar to schedule a time for us to talk and maybe take the next step forward. Today, I'm not here to make any money off of you, and there's no link at the end of this webinar to buy anything. This is all just going to be information, and I'm gonna mix information about strategies and information about the mindset necessary to have success in trading. I'm going to mix those two as we go. Now, I know that every single time that I do this kind of a webinar, there are traders who are brand new to trading, and they appreciate a brief overview of what to do first. So if you're brand new to trading and if you have a very limited amount of experience, and if you are thinking about getting trained and focusing and doing things in the right way, which I hope you are, I just want to give you a list of 4 things that you can concentrate on and study. So number 1, you need a brokerage account. I recommend Webull to start because it's easy to use. I don't accept any money from brokers in any way, shape, or form at any time. So this is there's no affiliate link here. They don't even know who I am. I don't recommend them because they pay me. They don't. I recommend them because it's a really easy platform to get started in trading. They have a wonderful paper trading feature. Paper trading is the process of practicing trading by pressing the buy button in a virtual account that doesn't actually execute a real trade with real money. And it helps you learn how to use the platform and test strategies in real time. So Webull, they make buying stocks easy. They're commission free, so it's inexpensive. And they have very low account minimums. So you'll be able to start an account with a very limited amount of money. Number two, you're going to need some charts. Now, Webull does have charts. What are charts? Charts are a visual representation of price. So in order to take trades, some traders, most traders, use a visual representation of price called a chart. And they have on their chart what are referred to as candlesticks. Some use other forms, but candlesticks are the most popular. They were kind of popularized by my friend Steve Nissen, who translated ancient Japanese texts where rice traders in ancient times would chart the price of rice to forecast the price in the future. And so that's kind of an interesting tidbit of information that I've never mentioned before. So he translated all those texts and they became enormously popular. The green candlesticks, because they kind of look like candles, are bullish. Bullish is another way of saying that price was going up. The red candlesticks are the sellers are in control and price is dropping. So green is for price rising, red is for price dropping. A chart is a graphical visual representation of where price is going, and you can display price in increments of time. So AHI here, comma 5, that you can see on the watermark behind the chart means this is a 5-minute chart. You can also look at charts in 1-hour increments so that each of the candles are 1 hour. You can look at them in 15-minute increments or 1-minute increments or 30-second increments and so forth. We use charts on the 5-minute time scale in our group. Now, you're welcome to choose any time scale that works best for you, but I'm going to teach you from this time scale because it's kind of a perfect mix of information that we need. Number 3, we're going to concentrate on buying stocks. I also do some short selling. Buying stocks is the process of buying a stock and hoping that the price goes up and then selling it at a higher price. That's what we just looked at when we looked at AHI. Short selling is the process of betting against a stock, betting that the price will go down. It's a little bit of it's a slightly more complicated method, but say for instance that AHI had reached the end of the day, printed a really, really bearish set of candles. We can talk about that later. And we wanted to bet that the price was going to go down. Well, you can do that. You can actually make a bet that price will go down, and you can start your bet up here, tell your broker that you want to short sell AHI, and then if price does fall, you will make money as it falls. Now, it's not really that complicated. It's just a little bit different at first because most people are accustomed to looking at stocks going up, and that's what we're going to focus on today. So we're going to focus on buying stocks. It's the easiest way to get started, and we're going to focus on that. The other terms that I'm going to want you to write down and pay attention to are pre-market and after-hours trading. Pre-market means the market is open for trading actually before the New York Stock Exchange bell rings. So you've seen people stand at the NASDAQ or the New York Stock Exchange and ring the bell. That happens at 9:30 a.m. Eastern time. But in this shaded sand color here, this is the pre-market session, and it's open for electronic trading on Webull, Robinhood, Tastyworks, Thinkorswim, E-Trade, Schwab, Fidelity, and every other broker. Most people don't know and are not aware that you can trade before the market opens. Well, you can. You can electronically trade on all of those platforms before the market opens. I want you to get used to understanding that that session exists because we're going to use levels from that session, and we're going to trade breakouts from beyond those levels. The market is also open after hours. Now, what does that mean? It means that after the stock market officially closes at 4 p.m. Eastern time, there's still more to come. The stocks can still move. There's an electronic trading session available after 4 p.m. Eastern that stops at 8 p.m. Eastern. And with every single brokerage account you can imagine, Webull, Robinhood, Tastyworks, Thinkorswim, TradeStation, and all the others, you can actually continue to take trades in the after hours session. The reason this is so incredibly important is that some of you may find that an after hours, afternoon, later in the day session is actually more convenient for you. And you've probably never been told that you can trade that session and you can actually make money if you learn how to do it right during that session. It's not any more risky than regular trading. All trading is risky. Trading involves a substantial risk of loss. It's not suitable for all investors. And I encourage you to make sure that you check with a financial advisor to see if trading is right for you before you really get started on anything in particular. All right. All right, so here we go. We're now going to get into the meat and potatoes of the session today. So let me know how the audio is working. Is the audio doing okay? I plugged all this audio stuff that I usually plug into my Mac. I plugged it into my Windows computer here in my home office, and I got it all tested before we started, but I just wanted to make sure that it's working okay. All right, so let's get started with the rest of the presentation. Now, we will return to the charts. We will return to look at strategies for entering trades. And we are here live for those of you that are just getting here. It is Sunday, June 11th, and it's 12:16 p.m. Central Time. Thank you, Joshua. Okay, so maybe you've heard the news. Our friend Jack Kellogg has been featured in the news quite a bit lately. He's a 24-year-old stock trader who made over $8 million in 2 years. And how did he do that? He's actually up over $12 million. So how did he get there? Well, you might be here today because you want to accomplish something like that. A few years ago, Jack Kellogg was parking cars for a living. That's he wasn't a mathematical genius, hadn't graduated from college or anything like that. So you're probably here today because you want to learn more about trading. You might not be here to sign up for anything. You might be here to sign up to work together with me and Tim Sykes. You may be here today for some other reason. But what are you exactly looking to get out of this presentation? Because I hope that what you're looking to get out of this presentation is a methodology and a system and a strategy for buying stocks, and maybe some information on mindset and risk management to help you accomplish your goals. If that's what you're looking for, then you're in the right place. So if you're looking for more information on risky penny stocks, not really interested in that. We won't be talking about that today. We'll be talking about actual NASDAQ listed stocks. We're also not going to focus on options. So if your focus is on options, we're not really going to cover any of that today, although you'll be more than welcome to stay here. And the strategy that I teach you today will be applicable to options trading. I really don't want to focus on that. I think options trading is cool and interesting and whatever else, but it's not really what I do. And for those of you that are interested in options, it can be a really great way to trade. I have nothing negative to say about it other than just like every other kind of trading, it can be risky if you don't use stop losses, okay? So our meeting today will take about another 30 minutes, and if you're going to stay until the end, you can let me know in the chat. I'm very glad that you're here. I know what it's like to want to have a better life for you and your family, and trading may in fact be the answer. I want you to be successful, and that's the reason that I'm here. I'm not doing very many more of these presentations, probably maybe 3 or 4 more of these, and then it's done. And so, some people ask me sometimes, like, why would a trader for 22 years, why would a millionaire trader want to do a webinar about trading or whatever? That's a good question. And I do love talking to traders, and I do love sharing the strategy. But you're right. I mean, eventually I will just switch to working exclusively with people inside the program. And I won't really be doing as many of these public sessions like this. So the reason that I'm here today is to introduce what Tim Sykes and I do to you for one of the last times that you'll have a chance to work together with me. So if you're ready, if you're excited, then I'm super happy that you're here. I think I know why you might want to be a trader. You want to be a trader for your family, for yourself, and to help create a better life. But the reality is that if you're here, maybe you're missing trades. Maybe you only find out about the big movers after they're done, and that's incredibly frustrating. Or maybe you might be brand new, just starting out in trading, and you want to learn what to do right now, and you want the information in the simplest form possible. Maybe you're making some of the same mistakes over and over, and it gets incredibly frustrating, and you've started to wonder, hey, is trading a real path to wealth? And I'll answer that question for those of you that have made some mistakes. Because successful trading is about, well, walking a path. And I'm going to share some lessons from my career as a trader, and I call those lessons how to get rich trading stocks. So number 5 on that list as a countdown. Number 1, you want to trade a proven system. Like, stop trading unproven methods. Stop following any traders blindly, and focus on one method from a mentor that you trust and who is already trading for a living. It doesn't have to be me. I just want you to trade a proven system. If you decide that you'd like to work together with me, if you like what we're talking about here and you like the introduction to the Tim Sykes Challenge, then you're going to have a great chance to book a phone call with me or a member of the team and talk about the challenge. And that link is already inside the chat for you. At any time during the presentation, you can copy and paste that link in another browser window. You can continue to listen to me, and you can book a call. All those calls will be taken. In fact, in about an hour, every single spot that's available will be taken all the way up to probably Thursday. And I'm doing 3 webinars today. And if you want to take all the spots, you can, but I'm just going to say, if you wait to take a spot until later, they probably won't be available. So back to the presentation. If you want to get rich trading stocks, I believe you need to buy strong stocks. That means stop trying to catch a move or get a great price by buying a stock on a dip. You want to trade what's moving in the direction that you want it to go already. What this means is you'll follow the flow rather than trying to predict it. And when you take a trade, it should be obvious that you're doing the right thing. So I built a scanning tool that we use together inside the Tim Sykes Challenge morning trading group. And this scanner looks for stocks that are moving. Once a stock is moving, I notify everybody in the group. We fire up our morning webinar and we chart it on the screen and we set up trades on it. And here's what that looks like. So let me walk you through what it's like when we do this in the morning. For those of you just getting here now, my name is Rob Booker. I'm happy to be here with you. I am the morning live trading instructor inside of the Tim Sykes Challenge. I've been trading for 22 years. I managed money from 2005 to 2012, wrote some books, hosted a podcast and a radio show and a YouTube channel and all that. And now I work together with Tim Sykes. We joined forces and I lead a morning trading group and we watch the stocks every single morning together. So the reason I'm here today is to introduce you to that program and tell you a little bit more about what we do, because it's nice to make an informed decision on whether or not you're going to decide to work together with us. So here's what it would sound like if we were working together in the morning. And I'm going to do a play-by-play call as if we were doing it live, just to sort of give you an idea of what it's like. All right, good morning, everybody. This is OMH. Now, as the market has opened already, and it made a pre-market high on this stock at $29.93. We're looking for it to break through that pre-market high. Once again, the pre-market high is the highest high that the stock made in the early morning hours before the stock market opened officially, but was, of course, open for trading in the pre-market session. So what we're waiting for is a breakout beyond that level, and we did get that breakout. So here we are. So if we were watching this live, I would say, all right, everybody get ready. It's approaching that pre-market high and it's getting ready to break out. In fact, we're just about $1 away from that pre-market high. And let's go ahead and we can start the process of entering those buy trades. We want to get our profit targets in place, but we want to make sure that we don't miss this entry as it breaks out and above that pre-market high. So as it gets really close to it, we take an anticipatory buy trade sometimes with a smaller trade size. And then we go full trade size if that break occurs. Now, the reason that we do that, of course, is because we're going to buy stocks that are strong. And some of you may be wondering, why don't we buy stocks at the bottom? And the answer is because as well as I do, that sometimes you try to buy stocks at a bottom and they just keep falling, and we don't want to do that. We do not want to stop out. We want to buy something that's strong, and we want to buy something that's proving that it can break out and move higher. All right, it broke out, it moved higher. It has not crossed down below the volume weighted average price, so we can stay in that trade. And let's stay in that trade until it prints a red down candle, and then we would watch it as it goes, and we would set our targets, and we would plug those numbers into our platform. We would continue to raise our stop losses so we protect our profit, so we don't lose anything that we've made. And that's what we do. And I subscribe to, or I have a philosophy that centers around the one-stock system. A one-stock system is a strategy whereby we only really look at one stock per day. And you might be thinking, that's absolutely crazy. Well, it's not crazy. In fact, we look at the stock that is most likely to break out, that comes from my scan that I built, and then we focus our attention on that one stock. Instead of having our attention diverted in many different directions, we're going to have our full focus and complete attention on one stock, and we're going to do a great job of trading that one stock. And we get that one stock right pretty much every day. Now, we'll start the day off maybe looking at 3 or 4 and then narrow it down to 1. And if that one starts to wobble and doesn't really do what we need, we may get an alert on another stock that's taking its place, and then we'll divert our complete attention to that other stock. The reason we do this is we're not looking to trade multiple stocks, and we don't have favorite stocks. We have least favorite stocks, that's for sure, but we don't have most favorite stocks. We're not interested in just finding a trade on one stock. We're interested in finding trades on any stock that fits the pattern and is doing the system that we look for. All right, so OMH did that on May 15th. On the 22nd of May, MBOT did that, and it just sort of breaks out, pulls back, breaks out, pulls back, breaks out, pulls back. And every single time it pulls back and then breaks out, that's a brand new trade. And we're only looking to buy on strength. We're not buying on a dip. Now, people do that all the time. It's just not for me. We don't buy on a dip because we don't know if that dip is going to be deep and extensive. And if you've ever bought a stock that you thought was going to jump up and you thought somebody taught you to buy on a pullback and keep your stop loss tight and all those kinds of things, maybe it didn't work for you because you were buying stocks on pullbacks, which naturally means the stock is dropping. I don't want to buy into weakness. Some people do, and some people do it successfully. What I have found, however, is that students inside the program that I teach and that I work with seem to have an incredible amount of success because there is only one breakout level. Whereas on a bounce, it's very difficult to identify exactly the level at which it will bounce and move up for a long time. And we don't want to get caught. Now, for those of you that wonder, like, okay, those are historical examples. Do you ever do this in real time? I do this in real time every single day. And for those of you that were not here at the very beginning, we walked through and did the process of breaking down AHI and how it moved on Friday and how we watched it. AHI is actually our number one watch for Monday. So write this symbol down if you didn't already know it. We're going to watch for AHI to break through $3.50. If it can break through that level, it could rise as high as $5.82 or do an almost 100% move. AHI. Now, the other question that occurs many times is people will say, well, why are we focused on this stock? What is the news? What's the news that made this stock go up? And I'm going to surprise some of you, and maybe even, hopefully I don't upset any of you, but maybe I will. We don't really care. Stocks sometimes move up on good news, and stocks sometimes move up on bad news. Stocks sometimes go down on bad news, and they also sometimes go down on good news. The news really doesn't factor into this. What factors into this is that this was the strongest stock of the day that continued to break out higher and higher and higher. Now, you might be asking that question again. Wait a minute. How do you know which stock you're going to trade? Well, I built a scanning tool that shows me the number one fastest moving, strongest stock of the morning. And it will show me the strongest stock at every point in time during the day. And if we can continue to watch that strongest stock, we can plan trades on that strongest stock. It comes as a surprise to some people that finding the strongest stock is not difficult. It's not difficult at all, actually. It's planning trades and being patient and waiting for the trade to come to you. All right, I'm just checking out the comments. In my opinion, for traders with small cash accounts, Mark says, do you prefer to take one trade a day or split the cash? Great question. So if you have a small account, what you can do is one trade a day and sometimes hold overnight and sometimes use a day trade. The maximum number of trades you can take with a small account under $25,000 is 3 day trades a week, in and out in the same day. You can take an unlimited number of trades that you hold overnight. So what we'll do, Mark, is we'll do a mix of trades that we hold overnight and trades that we jump out of during the day. All right, so that is the point. We just covered point number 4, buy strong stocks. I can't emphasize that enough. Number 3, if you want to get rich trading stocks, cut those losses really fast. Never let a loss turn into something catastrophic, period. This is really the only lesson that you need. The rest kind of almost takes care of itself. Number 2, trade the sessions that no one thinks about. Trade before the market opens, or even take trades after it closes. Did you know you can do that? The market is actually open after the stock market closes. Sounds like a contradiction, but it's not. After hours trading begins at 4 p.m. Eastern time. Although officially the stock market bell rang and closed, electronic trading continues, and there's a whole bunch of it. Lots of volume, lots of activity, and what I would refer to as cleaner, simpler, tighter, effortless moves. Whereas GSIT jumped up and did climb during the day on this particular day, it really jumped and climbed after hours. It moved over 100% after hours. And we can implement the same strategy that we use during the day in the after hours session. And I'll repeat this again. Every single broker you can use, Webull, Robinhood, Tastyworks, Thinkorswim, Fidelity, Schwab, all of them will allow you to trade after 4 p.m. Eastern time in the electronic market. It's extraordinary. It's wonderful. So if you focus on that session, not only do you have all day to get prepared or live your life or run the errands or drop the kids off from school and pick them back up, but you also, in the after hour session, you'll be trading a session that's actually kind of cleaner. Whereas GSIT kind of bounced up and around in the regular market hours, it just was a rocket ship after hours, and that's really cool. VVPR is another great example of what I'm talking about. VVPR didn't do anything all day long. And then in the after hours session, it jumped. Now, we didn't know that it was going to jump. Nobody's going to be able to predict that a stock is going to jump. That's ridiculous. And people that tell you that they can tell you which stocks are going to jump, they're just lying. They're taking a guess. And I hate to say that, but they don't know. And there are honest people who take guesses and plan trades, the day before, and they say, I think this stock will move tomorrow. I don't do any of that stuff. I ignore all of those kinds of comments. And as I've mentioned before, and I will say again, I wait for a stock to actually move, to show me that it's moving. I don't try to predict that it's going to move. I let it prove to me that it's going to move. And only the strongest stocks will do that. So naturally, inside of this circle here, when this stock jumped up, in the after hours session, I got an alert for this stock. It's not on the screen right here, but this is the same scan that I use. VVPR popped up on my alert system, and it popped up because it jumped. So I didn't know it was going to jump, and we miss this first move. We're perfectly happy to miss that first move because we can draw a line across the tops of those candles and trade the breakout that goes higher. This is, and was for me, groundbreaking. It was revolutionary. To learn, not only do I have the potential to wait all day long and trade in a more relaxed session, I can also avoid trying to predict which stocks are going to move. I don't have to do it sounds like I'm being lazy, but I'm not. I don't have to do any research during the day on which stocks might move after hours. I don't care. I'm going to let the stocks show me which one's going to move because no one is a psychic. No one's going to be able to figure that out. So I let the stocks tell me which one's the strongest after hours. And then I trade those after hour stocks. Another great example is TRKA. It jumped up the early day and then dropped for the whole rest of the day and stopped a bunch of people out and really upset people. I remember this day in particular. And then in the after hours session, it jumped up and it popped up on my scan as one of the fastest moving, strongest stocks after hours. In fact, the strongest. So we then drew a line across the levels and traded the breakouts from one line to the next. We didn't have to know in advance that TRKA was going to move. We let TRKA tell us, hey, I'm moving. And then we took 5, 10, 15 minutes to get the trades on and do them. Now, last of all, if any of that sounds exciting to you, then I recommend that you get a mentor. I'm happy to be your mentor. I'm happy to work together with you. You can let me know by scheduling a time for us to talk so we can really make sure that we're a good fit for working together. The link is already in the chat, and there's already a button on the side of the webinar to the right, or if you're watching on a phone down below, there's a button that says book your call here, and you can click on that link right now and book a time for us to talk. Every single one of those spots will be taken, and I want to make sure you know that. So I think you should get a mentor. I know a handful of millionaire traders. I've interviewed over 50 retail home-based millionaires, and every one of them had a mentor. Every single one of them. What does it mean to have a mentor? What it means is you take a trade, you get some feedback on the trade, and then you take another trade based on that feedback, then you get more feedback, and you improve over time. Most of us, when we first start out, are trading sort of in a vacuum, and we don't know anybody who will work together with us personally who has already made $1 million. So what we find is we're following traders that don't really prove their trading and don't really show us anything. And we can get ourselves into a whole bunch of trouble when that happens. So you want to get a mentor. So as we conclude here, I want to remind you what the Tim Sykes Challenge is and why I'm here today, and maybe why you're here today also. The Tim Sykes Challenge is a program that Tim Sykes created after having turned $12,000 into over $3, $4, $5 million. He's over $7 million now. And it's a complete course that he created to teach traders how he was able to do it. And since the time that he launched the challenge, 30 plus traders have become millionaires from the course, from the challenge. Those include names that you've probably heard of before. Jack Kellogg, who we mentioned earlier, Tim Grattani, who's over $18 million in profits, and other names like Matt Monaco and Bryce Toohey and some of the greatest traders I've ever met in my life. They all went through the Tim Sykes Challenge. They all went to a webinar like this that was an information session. They got some more information. They felt like, okay, I'm ready to take the next step. They booked a call, and on that call, they were able to plan their trading future for free, just like you will be able to also. So if you decide that you are a good fit for the Tim Sykes Challenge, you'll enter this group that I trade together with, where you'll get a complete course developed by Tim Sykes and live trading every day together with me to help you have more success in your trading. The only way to get into the Tim Sykes Challenge is to book a call, which is a strategy session. And on that strategy session, we'll talk about, hey, listen, do you have a big account or a small account? Okay, if you got a small account, here's how we're going to build a routine and a plan and a schedule for you. If you've got a really gigantic trading account, okay, here's how we're going to plan. What are your goals? What exactly do you want to be able to accomplish in 6 months or in a year or in 3 years? What are some of the obstacles in your way? And it's a chance for us to go from this group type session here into a more personalized one-on-one situation where we're really planning out your trading future. And then if you decide to work together with us, great. If you don't decide to work together with me, hey, at least you have a plan and a blueprint in place. So it's definitely worth. Now, I mentioned at the beginning, and some of you already heard this, every single one of those call spots will be filled all the way through Thursday in about an hour. And the reason that is coming up in the next 20 minutes, I'm doing another webinar for another group of traders inside the Tim Sykes Challenge, and they're going to have a chance to book a follow-up call just to get a status update and just to help them out. And they're going to take all of the calls. They're going to book all of them. So if you want to discuss your trading future and build a plan and potentially work together with Tim Sykes and I, then definitely click that link now and let me know that you did it, and I can just sort of give you a shout out, and you can tell me whom you're scheduled to speak with. So many of you know this. Tim Sykes has been one of the most successful traders ever. He was just featured again in Business Insider yesterday. He has done a 660% return in his account in the last 3 years. And Tim Sykes every single week updates the course content, updates the lessons, sometimes does a webinar. And then I step in and I run the morning trading group. And when I run that morning trading group, we set up trades like this, like on AHI. We set up trades on breakouts, and we just trade the same thing in the same way every single day. And boy, we would really love to do that. All right, so Steve says recorded, question mark. Steve, I don't see any other part of your question. So let me know what you are referring to. Okay, I'm going to repost the link inside the chat, and then I'll take some questions. I'm going to get a drink of water here while I wait for your questions to come in. There's quite a bit of a delay. There's about a 20-second delay between when I say something and when you hear it. So ask me anything about what we've talked about today, and or let me know that you booked a call. And then what we'll do is we'll get this party started. We'll get this process kicked off. And we'll do that for you. Now, there's some of you that have been here several times before, and I'm really happy to see you again. Okay, so will there be a replay? So I just heard back from the team. They are going to attempt to get a replay of this session. What I would do, Ale, is book a call for later in the week, like Wednesday or Thursday, because all of the spots are going to, I'm not joking around, like all of the spots are going to get filled. So book your call for a little bit later, then watch the replay. And then you won't miss out on having a call to plan your future and get a blueprint in place for your trading future. And you'll still be able to watch the replay and get this all down. All right, so yep, that's great. What data package from Webull? I don't know which data package from Webull. All you really need, Frank, to trade together with me is NASDAQ real-time data. So if that's one of the data packages on Webull, I didn't know Webull asked for a data package. I never had to choose that as far as I remember. Okay. The questions. Michael says, thank you, Rob. Well, thank you, Michael, for being here. And Ollie says, okay, thanks. Yeah, the team let me know that they are recording this session, and hopefully they'll be able to send that out to everybody that was here. That's great. Next time I do one of these, like later on today, I might record that session, and then, while we are here live, make sure that session link gets put up there. Once again, as we conclude, you can also, if you're watching on YouTube, go to robbiebooker.com/challenge. And we got about another minute. And then the link will come down. And like I said, in about 19 minutes, I'm going to fire up another webinar for current members of the Tim Sykes Challenge. And they're going to have the chance to book a follow-up call. And they're going to take all the spots. So if you want one, you should grab it. And like I said, I don't mean to be pushy or anything like that. And I'm not trying to be hypey or salesy. It's just a strategy session. I think you're going to love the call. But I don't want you to miss the opportunity to do it. If you come back later on today and you realize there are no spots available until Friday, that's going to be a problem. So I know the team tries to put as many spots in there, but we're all sort of pressed for time in similar ways, and nobody's going to do calls all day long. So there are a limited number of spots available. Okay, looks like everybody had a chance to click that link. I'm going to leave it up for just another moment here, and I want to say thank you for being here. Thanks for giving this a chance. Thanks for listening to me talk about our trading strategy. I'm very excited to work together with you in the future. Thanks so much, everybody. I appreciate you being here. I look forward to working together with you, and I will see you on the inside.